Investors got another insight into the financial damage that natural disasters have wrought today. Insurer IAG released half-year net profit of $161 million, about half the previous year's figure. Earlier, I spoke to Chief Executive Mike Wilkins. A hit for the full year in claims of $540 million. You've been around in the industry for a long time. Have you ever seen a series of events like this?
Tikki, I can't recall such a concentration of significant events in my time in the industry. Really, the last 6 months, I think, has almost been unprecedented with 2 earthquakes, cyclones, floods and bushfires.
I'm curious, how do you go about, as a management team and indeed as a board, assessing how much reinsurance you pay for each year? And do you look over the shoulder at your competitors? What are the factors that go into it?
The key factor for us is the risk appetite that the organisation has. That is the losses that we believe we can sustain without putting the financial future of the organisation in peril. For us, we buy reinsurance with a retention of $250 million per event, and thereafter we protect ourselves for up to $4.1 billion above that $250 million. Over the last couple of years, we've taken the decision to buy down below that $250 million level. So generally speaking, we look for about $150 million per event.
I suppose fortuitously you've locked in your reinsurance for the year last month. What do you think the reinsurance world is doing globally? I'm seeing numbers now of $12 billion in terms of damage just from the Christchurch earthquake. You wouldn't want to be a Lloyd's name in the wrong syndicate, would you?
Well, the reinsurance industry is an international industry and it's very, very well capitalised, and whilst $12 billion is a lot of money in anybody's language, it won't threaten the solvency or the stability of the global reinsurance market.
But do you think that market is looking at the antipodes after these events and reassessing risk down here?
I think certainly the last couple of years in this part of the world would cause the international reinsurance markets to see Australia and New Zealand as riskier propositions than they might have been seen several years ago. That obviously has consequences for what we expect in terms of pricing for reinsurance.
You say you've got a maximum $40 million cost impact from the Christchurch earthquake. Now, yesterday, interestingly, Suncorp was saying it was going to be negotiating with its reinsurers as to whether this earthquake was indeed part of the September earthquake or a new event. Now, presumably that has quite a lot of implications for excess.
Yes, it does. We're currently treating the earthquake as a second event because we think that's the most prudent financial thing to do. So as we announced, the maximum cost to us from that earthquake before our reinsurance protections kick in will be $40 million.
Moving to the UK, and another big hit on your UK operation on top of a hit last year, and more losses expected, I gather, in this half. Shouldn't management have been prepared for the inflation rises in the bodily injury claim?
Well, certainly our pricing made allowance for the rise in superimposed inflation coming through these bodily injury claims. What has caught us, and I think caught a number of other insurers as well, has been the rapidity and the extent of those rises, because we're now seeing superimposed inflation running at up to 30% in some areas. The other thing I think that's influenced the UK is the rising incidence of fraud, and that's been acknowledged by a number of parties, including the Association of British Insurers, as an industry-wide issue.
It's going to take a while to turn around. Would you consider offloading it?
At the moment, we're concentrated on remediating the business. We believe that we've limited our downside through the purchase of adverse development reinsurance protection. What we are doing is repricing our book and quitting a number of relationships as we're able to do that. So that what we have said is that the loss that we're expecting in the second half will be much reduced on the loss that we reported for the first half.
And a last one on climate change. I see today the Prime Minister has announced a carbon price for mid-next year. To what extent does this impact on the insurance industry strategy towards climate change?
Well, we believe that climate change is real, and I'm speaking for IAG here. We believe that climate change is real, and we've been a proponent of a market-based carbon trading scheme for some time. So we welcome the announcement from the Prime Minister. I haven't had the opportunity yet to look through the full detail of all of that, but we believe that there needs to be a price put on carbon, and our preference is certainly for a market-based pricing scheme.
Mike Wilkins, a very busy second half for you, I'm sure. Thank you very much for joining us today.
Thanks for having me on.